Today, we're diving into an investment analysis on Energy Fuels, ticker UUU.
Mm-hmm.
It's all about its 2026 breakout potential, focusing on uranium production and its new rare earths business.
Yeah, and the research here is strong. It's got high energy, it's contrarian, it's exactly what this kind of investor is looking for.
Right.
But with an analysis like this, conviction is all about the structure. We need to make sure the framework really maximizes the impact of the data. The opening hook, the one about the 8% price drop to $14.50, it's really powerful.
Oh, yeah.
But the report needs to do a better job weaving that immediate opportunity into the long-term macro thesis.
I noticed that right away. That separation. The opening does a great job setting up that feeling of a market overreaction.
Totally.
It says, I know the screen is red today. The bears are out. It really establishes the pain point.
But then it just lets you sit with that panic.
For way too long, before it delivers the actual counter-argument.
Exactly. It states the dip, the panic, and then it just jumps to the 2026 catalyst. The two ideas are treated sequentially.
Instead of cause and effect.
Right, and that really weakens the conviction that, nothing fundamentally changed about the company.
If you're telling someone to buy the dip, you have to immediately show them why it's a dip.
You have to deploy that fundamental strength instantly to redefine the short-term noise.
It feels like the report presents a problem, the panic, and then makes you wait for the solution. And the solution is the huge strategic importance of Energy Fuels.
I think you have to hit the reader with the geopolitical sledgehammer right away. If the market is panicking, the report needs the counterpunch immediately.
To show why the dip is irrational.
Exactly. And that counterpunch is the U.S. advantage.
So how do we do that? How do we fuse that geopolitical weight right into the analysis of the price drop?
Well, the suggestion here is to integrate that macro evidence, the U.S. advantage, directly into Section 1.
Okay.
Use the political and strategic importance of the company's assets to define the overreaction. You have to frame the panic itself as a mispricing of a national asset.
That makes so much sense. You don't make the investor wait until the second section to understand why selling this particular stock is, absurd.
You define its intrinsic, non-cyclical value from the get-go.
So the dip looks temporary and unwarranted.
And you use assets as the immediate counterpoint to all that market noise.
Can you give a concrete example? What would that actually look like in the text?
Sure. So when you're talking about the panic sale at $14.50, you immediately pivot.
To what?
To the fact that the U.S. government is actively banning Russian uranium, and at the same time, it's pouring money into domestic supply.
Ah, for energy security?
Right. Don't just mention the dip. You have to redefine it.
That completely changes the context of the risk. It's not about market swings anymore. It's about national security strategy.
Precisely. Use Energy Fuels' position as the, quote, #1 undisputed king of U.S. uranium production capacity as the definitive counterpoint. And illustrate why selling a strategic asset like the White Mesa Mill, which is the only operating conventional uranium mill in the entire country.
Yeah.
Why selling that on a minor dip is just fundamentally irrational. It turns the panic from a generic pullback into a move that flies in the face of geopolitical reality.
That strengthens the contrarian hook so much. By defining the strategic value right up front, the whole tone shifts from here's why you should buy to
here's why the market is wrong and you should capitalize on that mistake right now.
Much more compelling.
It's all about conviction and speed. If the goal is to capture the dip, the counterpunch has to be fast.
Okay, speaking of the underlying thesis, let's talk about the secret weapon part of the story.
The dual narrative, nuclear energy and EV tech. That's the core alpha the report is trying to sell.
Right. My main point here is about the sequencing. The report says Energy Fuels is becoming this dual threat.
Nuclear and rare earths, yeah.
And that's the hidden bonus. But I think the report should be much clearer about how these two different revenue streams actually drive the growth for FY 2026.
I agree. The order of operations is critical here. An investor sees a big growth target for 2026, they need to know which engine is firing first.
Is the clarity there right now?
No, it's diluted. Is it the uranium that provides the immediate cash flow, or is it the REEs that provide the long-term re-rating? It's not clear.
That's the weakness. The report kind of lists the rare earth elements initiative, the processing, targeting those heavy REEs like dysprosium and terbium.
Right, for late 2026.
And it presents that as equally significant to the high-grade pinyon plain uranium ramp-up.
And that blurs the primary cash flow driver for 2026. It really dilutes the focus.
It almost makes it sound like a complex rare-earth separation milestone has the same level of certainty as, just mining high-grade uranium.
Which is a mistake in presentation. The investor needs a clear roadmap, a sequence of value creation.
So we need to separate the immediate profit driver from the longer-term strategic catalyst.
Exactly. So the suggestion for improvement is to structure the bull case to really differentiate between the two. The primary source of high-margin cash flow in 2026,
Which is uranium production?
and the source of the long-term strategic valuation, which is the RE separation.
That gives the reader a clean two-stage roadmap. They know what milestone gives them the hard cash return first, and which one justifies the premium valuation later.
It lets the argument build logically instead of just being a list of things that might happen.
Okay, let's get specific on defining those two stages for the writer. How do we make that distinction crystal clear?
We need to be very specific with the language. Stage 1 should be all about the physical mining assets.
Okay.
Frame the Pinyon Plain mine ramp-up, the highest-grade uranium mine in the U.S., as the immediate source of FY 2026 revenue growth.
Right. That mine means low costs and printing cash margins. It's a reliable, easy-to-understand metric.
So uranium is the high-certainty cash cow.
And that fuels the next stage.
Exactly. Then you position the White Mesa Mills REE retrofit and that late 2026 commercial milestone as the big narrative shift.
The part that justifies the premium valuation.
That's where you can deploy that great line about UUU being a tech supply stock disguised as a mining stock. The RE capability is the pivot.
It's what demands a higher multiple than just a pure uranium producer.
For sure.
That sequencing is so much more sophisticated. First, the proven high-margin cash flow from Pinyon Plain kicks in. It establishes stability. Then the RE pivot guarantees long-term strategic relevance in the global supply chain, which justifies those big price targets. It validates the whole argument.
It turns the analysis from a simple list into a detailed, prioritized investment thesis. That's what builds credibility.
Okay, so once the reader gets the internal mechanics, the U.S. advantage, the sequential cash flow, the next question is external validation. How do we get them to believe those huge price targets?
And that's the next big pivot we need. The report has these extremely bullish price targets.
Yeah, the bull case is what, $27.50 to $32?
Up to 110% upside. But they're presented in a separate section way at the end.
I know.
And that just diminishes their power.
It feels like an afterthought. Like it's the conclusion you reach after reading the evidence, not a key piece of evidence itself.
That's the weakness. By putting the analyst consensus and those high targets after the catalyst, the report misses a huge opportunity.
An opportunity to what?
To use external validation to lend immediate credibility to its own claims, especially about the nuclear supercycle.
Right. Those claims that spot prices are surging to $80, $100 a pound.
Those claims feel aggressive on their own, but they feel way more grounded if we know that external experts already agree on the company's valuation based on those assumptions.
It's about weaponizing that credibility early on. If you're going to ask someone to believe in 100% upside, you need to show them they aren't the first person to see this.
Exactly. The validation proves that the market's smartest players are already pricing in the supply deficit you're about to describe.
The market is driven by forward expectations, right? Not just current facts.
Right. So the suggestion is to introduce that validation way earlier. Frame the macro thesis points, the supply crunch, the AI data center demand, the U.S. advantage, as the exact variables analysts are using to calculate this massive upside.
Don't wait until the end to show them the destination. Use the destination to validate the map.
That's a great way to put it. It strengthens conviction throughout the whole core of the argument. It tells the reader this isn't just our idea. This is where the experts see this going based on the conditions we're about to show you.
So where would you move it? What's the optimal placement for that target?
I think you move the whole discussion of the bull case price targets, the $27.50 to $32, so they come immediately after the macro thesis.
Okay, so like a capstone for the 2026 nuclear boom section.
Perfect. That way you use the targets not just as a closing appeal, but as a critical piece of evidence. It reinforces that the current $14.57 price is a profound discount.
Based on consensus long-term projections.
It turns the price target from just a forecast into a documented reason to buy.
And if you connect that high target to real-world demand like Microsoft and Constellation making those huge nuclear power deals,
Deals that require this exact domestic supply.
then the whole argument for the supply crunch in the valuation just clicks into place. It feels so much more robust.
It ensures that the high-energy, contrarian tone of the report is backed by external, documented validation. Early, you have to ground the enthusiasm in real numbers.
This has been a really targeted critique. The goal here is to take what is already a strong analysis report
The underlying data is absolutely correct.
and just turn it into a structurally optimized powerhouse.